Hello and welcome to another session of the My Solo 401k Financial Daily Webinar Series. We're excited to get started. If you have questions or topics you wish to discuss, please chat those over now so that we can be sure to get to them all. As always, the presentation is being provided for educational purposes only and should not be construed as tax, legal, or investment advice, nor as a solicitation. When making an investment decision, please consult with your tax attorney and financial professional. Again, welcome to your daily Solo 401k webinar and Q&A session with My Solo 401k Financial, where we help you to stop overpaying taxes and start building real retirement wealth. Today's topic, LPL Advisors, what your clients need to do now to meet the December 31st Solo 401k deadline. This is your chance to get answers. Please use the chat now to ask questions on today's topic or anything else. Please, again, chat them over now so that we can be sure to get to them all. So we'll start out with the initial question that was chatted up. How to set up checkbook Roth IRA to own real estate, aka LLC owned by Roth IRA. So that's a great topic. It's not a solo 401k question, but we definitely can field it. Thank you so much for bringing it. All questions and topics are welcome. So a Roth IRA, specifically a Roth IRA LLC, would be used by someone who has Roth IRA money and they want to invest it in alternative investments. Could be real estate, could be a private placement, could be a pre-IPO stock, et cetera, et cetera. So in order to invest in real estate using your Roth IRA funds, you need to have a Roth IRA account that allows for investing in real estate. Now, there are specialty providers, trust companies, financial institutions that offer Roth IRAs that are self-directed that do allow for investing in alternative investments like real estate. But the issue is that under the Roth IRA rules, that Roth IRA account needs to be at the trust company, at that specialty provider. So that means that in order to access the money, the Roth IRA account holder needs to go back to the trust company, back to the custodian. For example, if they want to access the money to buy the real estate or to pay for expenses, etc. So based on experience and client feedback, clients would get frustrated with that model. So in response to that, the IRA LLC structure was born. So with the IRA LLC structure, those Roth IRA funds are invested into a brand new LLC where the sole member of the LLC is the Roth IRA and the Roth IRA account holder acts as the manager. So now the money leaves the Roth IRA account at the trust company, goes to a bank account in the name of that LLC, where that Roth IRA account holder, as the manager of the LLC, has checkbook control over the money. So that's how it works in a nutshell. So you have to transfer money from your existing Roth IRA to a Roth IRA, one of these specialty custodians. For example, the vast majority of our Roth IRA LLC clients are at Forge Trust. Then the money is moved out of the Roth IRA at Forge Trust over to a bank account for a brand new LLC that's set up where the sole member of the LLC is the Roth IRA and the manager is the Roth IRA account holder. Then the individual, as the manager, can direct the investment of that Roth IRA LLC funds from the bank account for the LLC to acquire real estate. For example, the real estate is titled in the name of the LLC. And then, of course, the individual needs to follow the Roth IRA real estate investing rules where they're not using the property for personal use. It's acquired from an unrelated person. It's leased or sold to another unrelated person. The Roth IRA account holder is not working on the property, again, not using it for personal use. So it's a totally passive investment. Hopefully that sheds light. Thank you so much for bringing that question. So now let's dive into the topic at hand, which is LPL Advisors, what your clients need to do now to meet the December 31st Solo 401k setup deadline. And to lay the foundation, let's talk about who's even eligible to set up a solo 401k. So in order to be eligible, you have to be self-employed and you cannot have any full-time W-2 employees working for you. So self-employment would be established by reporting self-employment activity on your taxes. Examples of self-employment activity would be income reported on Schedule C. For example, if the self-employed business is taxed as a sole proprietorship, or a single member LLC taxed as a disregarded entity. So in other words, an LLC taxed as a sole proprietorship. For self-employed businesses that are taxed as an S Corp or a C Corp, earned self-employment income would be income reported on a W-2 that's issued to the individual from the S Corp or the C Corp. And then lastly, for a business that's taxed as a partnership, in other words, a business that files a Form 1065, earned self-employment income is income reported on line 14 of the K-1 from the partnership. The other part of the eligibility criteria is that there can be no non-owner, non-spouse, full-time W-2 employees. So you could have contractors working for your business, and that would not preclude you from setting up a solo 401k because contractors are not paid as a W-2 employee. They're paid as a 1099 independent contractors. You could even have employees, but you'd have to be careful that they don't work more than 1,000 hours per year with 1 year of service, or 500 hours per year for 2 consecutive years. In other words, that they don't work on a full-time basis. Now, your spouse may be working in the business, including as a full-time W-2 employee, and that would not prevent you from being eligible to set up a solo 401k. In addition, another owner of the business could be working in the business, and that would not prevent you from setting up a solo 401k as long as that other owner is at least a 3% or more owner. In addition, you can have a solo 401k even if you have a W-2 day job, even if you participate in your W-2 employer sponsored plan, provided that you got that separate side self-employment income with no non-owner, non-spouse, full-time W-2 employees working for any business owned by you or a spouse, if any. Now, one of the top reasons that clients will set up accounts is that a solo 401k has the highest contribution limits for any defined contribution plan available to self-employed individuals. And the reason that it has the highest contribution limits for any defined contribution plan is because, in the words of the IRS, you're both the employee and the employer. So you can make all types of 401k contributions, including employee, employer, even voluntary after tax. If you have a plan like the one offered by my solo 401k Financial that allows for those voluntary after tax contributions. So if you want to be able to make 2025 contributions, there's still time, because all that you need to do to preserve the ability to make all types of 2025 solo 401k contributions is to establish the plan by the end of the year. As long as you establish the plan by the end of the year, that'll keep all your options open and giving you the most time to make contributions. For example, as long as you sign up by the end of the year, you'll be able to make employee, employer, and or voluntary after-tax contributions for 2025 by your self-employed business tax return deadline, including any timely filed extension in 2026. So the critical deadline is December 31st. And what do you need to do by December 31st? Well, you need to establish the plan. If you look at IRS publication 560, which is the landmark guidance for self-employed retirement plans like solo 401ks, they make clear that as long as the plan is established by the end of the year, the self-employed individual will have until their business tax return deadline, including any timely filed extension, to make all types of contributions, even employee contributions, as well as employer contributions. So what does it mean to establish a plan? Well, let's understand what a 401k is. So a 401k is a legal entity. It's technically a retirement trust. So like any legal entity, it's the documents that create it. So focus on the paperwork first, because that's what establishes the plan. Establishing the plan does not mean opening up an account or obtaining an EIN number for the plan or even funding the account. All of that can occur by December 31st, or excuse me, after the end of the year, by the business tax return deadline, including any timely filed extension, as long as the plan is established by the end of the year. Now, we are neutral as the plan provider as far as where the accounts are established. So the accounts can be established at the bank or brokerage of choice. And a lot of our customers are working with advisors that might custody at a specific institution. So, for example, we've been fortunate to work with many advisors that custody at LPL. So the accounts can definitely be at LPL. In other words, the client can bring their own documents to LPL. So the accounts can be at LPL, but the documents are provided by my solo 401k financial. But again, there's no rush to open up the accounts by the end of the year. The only step that has to occur by the end of the year to keep all the options open would be to sign up, because that's what establishes the plan. So we establish the plan within the same business day when clients sign up. We make it easy to meet the deadline because, again, we establish the plan within the same business day when clients sign up. So all they need to do is sign up. The advisor can submit the information on behalf of the client. As soon as the application is submitted, which is really just a 1-minute application, we're asking for basic information, right? The name of the individual, the name of their business, the address, what they want to call the plan, etc. So once that information is submitted and payment is made, we prepare the plan documents within the same business day. So now it's in our system of record as the plan provider. The plan is established. They've preserved the ability to make all types of contributions by their business tax return deadline, including any timely filed extension for 2025, but in 2026. So they can take their time to open up the accounts, take their time to determine how much they want to contribute, etc. And those accounts, again, can be at LPL. We are neutral as far as where the accounts are set up at. And again, we've been fortunate to work with many, many clients and their advisors, or the advisor's custody at LPL. So it's not a problem. So the role of LPL is really just to provide the accounts. They're not providing the plan document. LPL is not policing the account, etc., from a plan perspective. So the client, again, can obtain the plan from us. And remember, a plan is a legal entity, so it's really the documents. What you can do is based on what the documents allow. So, for example, our plan documents are fully featured. They allow for mega backdoor Roth contributions. They allow for claiming the $1,500 in solo 401k tax credits. They allow for in-plan pre-tax to Roth conversions, right? In addition, we provide the ongoing compliance support, such as the Form 5500 EZ and a Form 1099R when needed, as long as the clients or the advisor on the client's behalf submits the information and requests it in a timely fashion, right? Because we don't have access to the accounts. For example, a 5500 EZ is due once the value of the plan assets exceeds $250,000. So we won't know that that's occurred until we're informed. But if the client or the advisor on the client's behalf requests it in a timely fashion, then we'll prepare the 5500 EZ. And we do it under the electronic filing system, the EFAS system, to make it easy for the client and the advisor. And we don't charge an additional fee to do that. Now, you can think of it as a 3-step process to establish the plan. The application is completed on our website that you can find quickly and easily at mysolo401k.net, and payment is made. We draft the plan documents within the same business day. So now the plan has been established. An email goes out within the same business day with a link to the secure portal. And an important tip here is if the client is working with an advisor, you can include the advisor's information on the application. So now we'll copy the advisor on communications. For example, the last question on the online application asks for the name of the plan, what the client wants to name the plan. And really, it can be any 2 words in the word trust, right? Because remember, again, a 401k is a trust. It's a retirement trust. So it could be a derivative of the business name, or it could be something else. It doesn't have to be, right? It could be something like Simple Wealth Trust. So in the online application, the client or the advisor, in response to the last question, can enter Simple Wealth Trust, and then please copy and then insert the name and email address of the advisor. So we copy the advisor on communications. So now the email goes out to the advisor, to the client, with a link to our secure portal where they can download the documents that were specifically drafted for the self-employed business, and they can sign the documents. They don't need to return the documents back to us in order to meet the deadline. They can take their time to do that after the first of the year. So by completing those 3 steps, now the solo 401k owner, the solopreneur, has locked in the maximum options in terms of 2025 contributions, meaning they can make all types of contributions, and they have the most time to make those contributions because they can make all types of contributions by their business tax return deadline, including any time they filed extension in 2026. So again, that first step, that's where we're gathering the information about the plan, about the business, about the individual. The name and email address of the advisor can be included in response to the last question, along with the name of the plan. Once that application and payment is made, then we will draft the plan documents within the same business day. So those plan documents are going to include the adoption agreement, the trust agreement, the IRS favorable determination letter, which confirms that the plan is a qualified plan. So when the solopreneur goes to make contributions, they want to make those contributions to a qualified plan so they can reap the tax benefits, whether it's making pre-tax contributions to reduce their taxable income now for the year for which they make the contribution, or whether they make Roth contributions that have the potential for tax-free growth. In either case, it's going into a qualified plan. So those documents, among others, are provided within that same business day. Now the client can download the documents, sign the documents, but they can take their time to return the completed and signed pages once they're ready, because now they've met the deadline. They can take their time. But when they're ready to open up accounts, which again can be at LPL, they will return the completed and signed pages. So in that initial email, there will be a secure upload link back to the portal to provide the completed and signed pages. And they can use electronic signature software if they'd like to do so to sign the documents. That's perfectly acceptable from a solo 401k perspective. And then there's going to be a third link in that email, that initial email that goes out. So you've got the download link to download the documents that were drafted to create the plan. You've got the upload link to return the completed and signed pages. And then there's the third next steps questionnaire where the client lets us know where they want to have the account at. So the client or the advisor can go and submit that quick next steps questionnaire. They can let us know that they want to have the accounts at LPL, for example. Then what we will do is we will obtain an employer identification number from the IRS specifically for the solo 401k. So that EIN number will then be used to open up the accounts. So oftentimes with advisors that are working at LPL, the advisor will handle the account opening, right, to make sure that it's associated with their advisor code, et cetera, so they can help manage the investments through LPL. Once the accounts are opened up, again, you need to have accounts opened up under the name and EIN number of the plan. This is a separate EIN number specifically for the 401k. We obtain that EIN number as part of the onboarding process. You'll have separate accounts, for example, if there are multiple participants, like a husband and wife that are both working in the same business, both participating in the solo 401k. As well, there will be separate accounts if there are different types of funds. So it could be a separate account for pre-tax versus Roth versus after-tax. So if you're trying to make mega backdoor Roth contributions, you would need an after-tax 401k account to make those mega backdoor Roth contributions. So the accounts are opened and then they can be funded. They can be funded in up to 2 ways. So one way would be to make a contribution. And we've been talking about that. So a contribution is where someone has earned income from their self-employed business and they're saving it for retirement. So as long as the plan is established, meaning the client signs up with us by the end of the year, that'll preserve the ability to make all types of contributions, whether employee, employer, and or voluntary after tax for 2025 by their business tax return deadline, including extension in 2026. The other way to fund the account is by rolling money over from a former employer plan or a non-Roth IRA. And we're very hands-on with our rollover process as well, because we've helped clients transfer funds from hundreds of different institutions. As you might imagine, the process varies based on where the money is coming from, and or the type of account. So for example, a former employer plan at Fidelity, there's going to be a certain process to transfer that type of account to the solo 401k versus an IRA at Vanguard. But we again are very hands-on. For example, completing the paperwork that might be required to initiate a direct rollover to the solo 401k. So some quick FAQs. Again, what do I have to do by December 31st? Establish the plan. How do you establish the plan? It's the documents, because a 401k is a legal entity. So all the client needs to do is sign up at mysolo401k.net. Just click on open account, then solo 401k, sign up and make payment, and that'll establish the plan. So as long as they do that by the end of the year, they'll keep all their options open. Do I have to open the bank or brokerage account by the end of the year? No, you don't, right? Opening the account is not what establishes the plan. It's the documents. And per IRS publication 560, as long as the plan is established by the end of the year, the solopreneur will have time to make all types of contributions, including employee, employer, and or voluntary after tax by their tax return deadline, including extension next year. So they can take their time to open up the accounts. They can take their time to obtain the EIN number specifically for the solo 401k. All of that can occur next year as long as they sign up by the end of the year. So is the tax return deadline my personal tax return deadline or my self-employed business tax return deadline in 2026? Well, it's the self-employed business tax return deadline. So if the business, for example, is taxed as an S corporation, it's going to be the S corporation tax return deadline. So March 16th, since the 15th falls on a Sunday, or September 15th, if you file a timely extension for that 1120S, that S corporation tax return. But let's assume that the business is taxed as a sole proprietorship. It could be a single member LLC that's taxed as a disregarded entity. In other words, a sole proprietorship, where the income is reported on Schedule C of the 1040. In that case, the self-employed business tax return deadline is the 1040 deadline. So it's April 15th or October 15th if they file a timely extension for their 1040. If I adopt the plan in December 2025, how can I make contributions based on income that I earned in January 2025? Well, the industry best practice, which is our best practice, is for the plan to be effective as of January 1st, 2025. So that is going to enable the individual to make contributions for 2025 based on all earned self-employment income that's earned and reported for 2025. My CPA tax advisor is informing me that the employee contribution must be made by December 31st. Are you sure that I can make this contribution in 2026? Well, this is a common point of confusion because the rules for full-time employer plans, for example, if you have a 401k at a day job, the rules for those contributions are that that employee contribution needs to be made by the end of the year. So the CPA, the tax advisor, they might be thinking of that rule. But the rules are different for self-employed individuals. For self-employed individuals, as long as the plan is established by the end of the year, you have more time. You have until your business tax return deadline, including extension, to make all types of contributions. And this makes sense from a policy perspective because a lot of self-employed individuals don't know how much they've made until after the end of the year. And their ability to make contributions depends on how much they've made. So that's clear. It's confirmed by IRS publication 560. So you do have time. The rules are different. All right, let's go to a question. Back to the questions. Thank you for bringing it. If my minor kids work for me minimally, do I pay them as W-2 or 1099? Also, what is the deadline to request for the 1099-R? So as terms of children working in the business, if they are minors, if they're under 21, it doesn't matter if they're W-2 or 1099-R. So you can arrange that through your tax advisor. Now, if they're 21 years or older, and if they're working as a W-2 employee in the business, working on a full-time basis, then that child would need to be made at least a 3% or more owner in order to preserve the ability to keep the solo 401k. Because remember, in order to have a solo 401k, there can be no non-owner, non-spouse, full-time W-2 employees. As far as the deadline to request the 1099-R, you would need to submit the form on our website by the end of the year. That's if the transfer occurred in 2025 to give us the information we need to prepare the 1099-R. Great questions. Thank you so much for bringing it. And thanks for the prior question as well, of course. If you're finding this information to be helpful, We would really appreciate it if you would like this video, whether you're on LinkedIn or X or Instagram or YouTube, as that'll help us get the word out to other advisors like you, other solopreneurs like you, who may need access to this information. We would also invite you to subscribe, as we do go live every day. So by subscribing, now you get notifications of when we go live. You can hear the content that we want to share that specific day. You can come and ask questions or hear what other folks are asking. So please, we invite you to subscribe to our channels. Again, whether you're on LinkedIn or YouTube or X or Instagram. We also want to invite you to our community. We have the largest community of solopreneurs, solo 401k owners, advisors, all around these topics. We have over 30,000 members, which means that we have a vibrant community. So the forums are active. We have a library of videos and webinars. It's totally free to join. All are welcome. So you don't need to be a client. You don't need to be an advisor that works with us. Just come, join, and participate. You can join quickly and easily at my solo401k.net/my community. So please don't hesitate to join. I'm not seeing any more questions come in. So it looks like that's it for today's Solo 401k session. Thank you so much for investing your time with us. Your time is valuable. Your retirement future is worth it. If you haven't yet, please like and subscribe so we can keep building this Solo 401k community. We'll be back here tomorrow with more crucial content to help you secure your retirement.